Did Bitcoin just flash a massive warning sign or a hidden opportunity? In February, its price crashed 17%, sparking panic. Yet beneath the chaos, key signals hint at something bigger brewing. In this video, I'm breaking down how Bitcoin's drop below the $92,000 short-term holder cost basis tests its bullish trend, why extreme fear and a SOPA reset to 1 might signal a market bottom, and how exchange outflow cost bases reveal unshaken long-term holder confidence. Let's dive in. Last month, Bitcoin experienced a significant decline, with its price falling 17.6% to close the month around $86,000. This drop, while notable, is not just a headline number. It provides a valuable opportunity to examine key technical levels that define Bitcoin's market behavior. These levels, illustrated on this chart, offer a roadmap for understanding where Bitcoin stands today. One critical metric is the short-term holder cost basis, which represents the average price paid by investors who recently acquired Bitcoin. In February, this level stood around $92,000. Bitcoin's close below this threshold indicates that many short-term holders, those who bought in the recent past, are now holding assets worth less than their purchase price. This situation often creates selling pressure, as newer investors may seek to cut losses or exit positions during periods of uncertainty. However, Bitcoin's price did not collapse entirely. It remained above two other important benchmarks, its 200-day moving average at $82,000 and its on-chain mean at $64,000. The 200-day moving average is a widely respected indicator of long-term price trends, smoothing out short-term fluctuations to reveal the broader direction. Meanwhile, the on-chain mean reflects the average acquisition cost of all Bitcoin in circulation, based on blockchain data. Holding above these levels suggests that, despite the recent downturn, the broader bullish trend remains intact. This resilience is a key point for analysts tracking Bitcoin's health over extended periods. While Bitcoin's primary upward trend persists, the breach below the short-term holder cost basis at $92,000 presents a challenge. For bullish momentum to resume, the price must recover above this threshold. Until then, the market may face continued volatility as short-term holders reassess their strategies. Next, let's examine the Fear and Greed Index, a key sentiment indicator for Bitcoin and the wider cryptocurrency ecosystem. In February, this index plummeted to levels of extreme fear, a threshold not seen since mid-2022, a period marked by significant market stress. Notably, these deep fear levels are unprecedented within the current bull market. The chart highlights this sharp shift, reflecting widespread concern among investors. For those new to this metric, the Fear and Greed Index is a composite score, ranging from 1 to 100, where lower values indicate fear and higher values signify greed. It aggregates several factors: Bitcoin's price volatility relative to recent trends, its momentum and trading volume, sentiment on social media platforms, Google Trends data capturing public interest, and Bitcoin's dominance within the cryptocurrency market. A reading of extreme fear, typically below 25, suggests that investors are gripped by caution or outright pessimism. In my analysis, this steep decline in sentiment seems exaggerated, likely fueled by macroeconomic pressures, like inflation or interest rate shifts, and geopolitical uncertainties, rather than a fundamental flaw in Bitcoin itself. Historically, such fear-driven periods have often aligned with market bottoms, where panic overshadows the asset's underlying value. While the current bull market had not previously encountered this degree of pessimism, the index serves as a powerful lens into investor psychology. Extreme fear signals either capitulation or an overreaction, and the rest of the data is pointing towards the latter. Now, let's turn to Bitcoin's spent output profit ratio, or SOPA, which offers a window into market profitability. In February, the SOPA reset fully to a value of 1, a pivotal shift illustrated on this chart. To grasp its significance, consider what the SOPA measures. It tracks the realized profits or losses of Bitcoin transactions by comparing the price at which coins are spent to their original acquisition price. A value above 1 shows coins being sold at a profit, while below 1 indicates losses. A SOPA of exactly 1 means the market, on average, is at break-even, neither gaining nor losing. Within a bull market, this reset to 1 often marks local bottoms, where selling pressure exhausts itself as investors offload coins at their purchase price. This break-even point suggests a pause in downward momentum, driven by fear or indecision rather than mass capitulation. For students of market behavior, SOPA's return to 1 in February hints at stabilization after the recent decline, offering a data-driven clue about potential recovery. If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. Next, let's explore Bitcoin's yearly exchange outflow cost basis, a metric illuminating long-term holder behavior. Data from 2020 to 2024 reveals that all yearly exchange outflow cost bases stayed below Bitcoin's price each year, a trend visible on the chart suggesting robust support. This cost basis is the on-chain volume-weighted average price of Bitcoin exiting exchanges, often to cold storage for long-term holding. When this level sits below the market price, it indicates these holders are in profit, reducing their urge to sell. From 2020 to 2024, this cost basis ranged between $36,000 and $69,000. With prices frequently above this range, long-term holders enjoyed healthy unrealized profits, garnering stability. Even at February's $86,000 close, the upper bound of $69,000 provides a significant cushion. This resilience contrasts with short-term volatility, and this chart reinforces long-term confidence. Finally, let's examine Bitcoin's rolling 4-year compound annual growth rate, which hit an all-time low of 14% in February. This metric tracks the average annual growth over a 4-year span, offering a long-term performance view. Compared to earlier cycles with growth rates exceeding 100%, 14% may temper Bitcoin's appeal as a high-return asset. However, this low percentage is simply a reflection of what was happening exactly 4 years ago, which turns out to be the peak of the previous cycle. You will see this metric continue to rise substantially over the next 12 to 18 months, as the 4-year datum shifts towards the most recent bear market. Don't be fooled by social media claims declaring Bitcoin dead at this level. They're missing the bigger picture. So, to wrap things up, last month offered some critical insights into Bitcoin's state. The price fell 17% to $86,000, slipping below the $92,000 short-term holder cost basis, which suggests potential selling pressure from recent buyers. Yet, it remains above the 82,200-day moving average, reinforcing the long-term bullish trend's resilience. Meanwhile, the Fear and Greed Index, reaching extreme fear, a level unseen since mid-2022, aligns with the SOPA resetting to 1, indicating a possible market bottom where selling may stabilize. Finally, yearly outflow cost bases between 36,000 and 69,000 underscore strong long-term holder support, though the 4-year compound annual growth rate dropping to 14% raised questions from uninformed investors about potential slowing growth. A data-driven perspective reveals a different story. Despite recent price turbulence, Bitcoin's fundamentals signal significant upside potential still ahead. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.